Okay, so when we're looking at the accounts, as I said, all of the accounts have a normal balance side. And the way you make an account go up is to do what the normal balance is. So if it normally has a debit balance account, you debit it to make it go up. If it normally has a credit balance, you credit it to make it go up. And then you do the opposite to make it go down. Okay. So if we look on the screen right here, we have assets and liabilities. So I'm going to show you kind of something that is that I did as kind of like a little note thing you could have on your notes for the exam or with your homework to help you with the arrows. But I'm going to put slides here, and this is also in your book to kind of help you to begin to get an overview. So this is in your book on page 313 through 315. So assets. Assets normally have a debit balance. So to make them go up, we are going to debit them. Okay. Assets have a debit balance. To make them go up, we are going to, all right. If we look at liabilities, liabilities normally have a credit balance. So to make them go up, we are going to credit them. And then you do the opposite to make it go down. All right. Okay. Now I'm gonna end up giving you a tool here that you can kind of combine this all into one. So just kind of hang with me here for a bit. Okay, stockholders' equity. Stockholder equity normally has a credit balance. So to make it go up, we are going to credit it. Make it go down, we will debit it. If we look at common stock has a credit balance. So to make that go up, we are going to credit it. To make it go down, we do the opposite. We debit it. Retained earnings has a credit balance. So to make retained earnings go up, we credit it. Now, dividends has a debit balance. So to make that go up, we are going to debit it. And they're on the slide here, they don't show you expenses, but expenses also have a debit balance. And to make expenses go up, you are going to debit it. Okay? All right, let's look at the next slide. Revenue. Oh, here's the expenses. Revenue. So revenue, and this one confuses a lot of people because they're like, revenue, that's the money you're making. Why is it a credit balance? It's a credit balance because of the accounting equation. Okay. So revenue has a credit balance. So to make it go up, you're going to credit it. Expenses have a debit balance. So to make it go up, you're going to debit it. Okay, so here's one example that you might kind of put things together in order to have it on a cheat sheet, or on your notes for the test. I'm going to show you a better way to combine them together, but this is just like one way to look at it. The normal balance side are the assets, the expenses, and the dividends. The normal balance side on the credits are the liabilities, stockholders' equity, revenue, and the common stock. Okay. Here's another way that some people look at it. They have the accounting equation there. You could do that. I don't think that's necessarily the best, so I am going to share another tool with you. Let's see. I do not recommend this one in the book. And the reason why I do not recommend this one is because it has those plus and minus signs, and history has shown me that that does nothing but confuse people eventually. It might look okay in the beginning, but eventually it will confuse you. You need to use the arrows, okay? All right, so I'm going to stop that share. I'm going to share an Excel sheet that I have with you because I want you to see my little kind of funky arrow thing I did here. If you could see that. So this is what I came up with as kind of a listing for the accounts that you could put on your note card that would not take a lot of room, okay? So it's the ADE, the assets, the dividends, and the expenses. Those are all debit balance accounts. So to make them go up, you debit them. To make them go down, you credit them. The LCRR, the liabilities, common stock, revenues, and retained earnings are all credit balance accounts. So to make them go up, you credit them. to make them go down, you debit them. Okay? So you can use something like that in your notes and for your exam and for your homework.